Hi, I'm Ruban Selvanayagam, co-director at Property Solvers. In this video, I want to dive into an issue that can feel frightening, urgent and overwhelming, the prospect of house repossession. For anyone behind on mortgage payments, those letters from the bank or building society can feel like the beginning of the end. But the good news is, from over 2 decades of working directly with people in this position, I can say that repossession is very rarely inevitable. The truth is that most lenders want to avoid repossessing homes. It's costly, time-consuming, and they're bound by strict rules that give you, the homeowner, far more rights than you realise. My aim here is to walk you through what happens step by step, what to do at 1, 2 and 3 months or more in arrears, the legal protections you have, what court hearings are actually like, and the practical options available to you if you decide selling is the best way forward. Repossession happens when your mortgage lender takes legal action to recover your home after missed payments. But it's not something they can jump straight into. Lenders are regulated by the Financial Conduct Authority, or FCA, and they have to prove that they've explored all reasonable alternatives before going anywhere near court. This is why the worst thing you can do is bury your head in the sand. The earlier you act, the more power you have to shape the outcome. And while repossession letters are designed to get your attention, they do not necessarily mean that you've lost your home. Before we dive into what happens month by month, it's worth knowing the permanent protections that exist for all mortgage holders in the UK. First, the pre-action protocol for possession claims. This is part of the civil procedure rules and has been in place since 2008. It requires lenders to treat you fairly, to discuss arrears openly, to provide clear written information, and to consider reasonable alternatives like repayment plans or extending the mortgage term. A judge can adjourn or even strike out the case if the lender has ignored these rules. Second are the FCA's mortgage conduct rules. These sit in the regulator's rulebook and require lenders to take repossession action as the very last resort. They must consider forbearance, things like switching to interest only for a while, deferring payments or lengthening the term, before they can go anywhere near court. Third, the mortgage charter. Agreed in 2023 between the government, FCA and most major lenders, it states that if you miss a payment, you cannot be forced to leave your home for at least 12 months, except in exceptional circumstances. It also gives you the right to switch to interest only or extend your term for 6 months and then switch back without any penalty. Fourth, there's support for mortgage interest. If you're on certain income-related benefits, the government may help pay the interest on your mortgage for a loan secured against the property. It's repayable later, usually when you sell, but it can provide crucial breathing space. Fifth, there are housing possession court duty schemes funded by legal aid. If your case does go to court, you can usually see a duty solicitor on the day who specialises in repossession cases, and they can represent you for free. Judges listen carefully when these solicitors step in. And finally, the Financial Ombudsman Service. If you believe your lender hasn't treated you fairly, you can make a complaint. While that complaint is being investigated, courts often take it into account, and it can slow or pause proceedings. These layers of protections don't mean arrears can be ignored. They do mean the system is set up to give you time, fairness, and options before repossession is even considered. So, your lender may have the legal right to repossess, but that doesn't give them the license to intimidate you. If you're feeling unsure about what to do, in addition to contacting Property Solvers, speaking to an independent charity or advice service can be a lifeline. Citizens Advice, for example, have local branches all over the country and can help you understand your rights in plain language. National Debt Line offer practical guidance on budgeting and repayment plans. For those running a business, Business Debt Line specialises in helping owners balance personal and commercial debts. There are also charities like the Debt Advice Foundation that provide one-to-one phone support if you want someone to talk through your options. These organisations don't have an agenda. They aren't trying to sell you anything. Their role is to support you and make sure the lenders play by the rules. In many cases, advisors can even speak directly to your bank on your behalf, which takes some of the pressure off you. And if you feel like your lender is treating you unfairly, you can escalate the matter to the Financial Ombudsman Service, who have the power to intervene. So what actually happens once you start falling behind? At around the 1 month mark, missing a single payment is stressful, but it's not the end of the road. Most lenders will send a formal letter or default notice. It may sound stern, but in reality, it's just a prompt to start a conversation. In our experience, the reasons people fall behind are often unexpected: an illness that stops you from working, a redundancy, rising bills, or even something as simple as wages being paid late. Lenders see these things every day, and they're far more understanding than people imagine, provided you explain what's happening. Pick up the phone, acknowledge the arrears, and give them a clear date when you'll make the payment. If you know it will take a week or two, be honest about that. If your wages are delayed, ask your employer for confirmation and forward it on. If your house is on the market, send over the listing or a letter from your solicitor confirming a sale is progressing. These small steps reassure the lender that you're taking the matter seriously. A typical first call will involve the lender asking why the payment was missed, whether this is a one-off or ongoing issue, and when you expect to make it up. Be prepared to talk through your income, your bills, and anything that has changed in your circumstances. The key is to not overpromise. If you know you'll have the funds on the 15th, for example, say so and stick to it. Lenders log everything, so consistency matters. It's also worth knowing that lenders are obliged to consider reasonable adjustments. That could mean moving your payment date, switching to an interest only for a short period, or giving you a few extra weeks to catch up. They also have to send you written details of what you owe and provide you with official guidance from Money Helper. At this stage, the main thing is to stay engaged. Even one phone call can stop a situation escalating. By contrast, when there's no communication, lenders often assume the worst. I've seen cases where a simple explanation was enough for lenders to give breathing space, while others in the same situation who ignored letters found themselves facing court far more quickly. When 2 payments have been missed, lenders begin to take a firmer tone. Letters and phone calls may become more frequent, and the language used can sound a bit more threatening. But remember, much of this is designed to prompt action rather than signal that court proceedings are about to start. This is where the pre-action protocol becomes important. It requires lenders to treat you fairly, discuss your financial circumstances, and give you a reasonable chance to repay before applying to court. They must also provide a clear statement showing the total arrears, your recent payment history, and the full balance owed. In practice, this means that even at 2 months in arrears, repossession is not inevitable. You may still be able to agree a payment plan, even if it's modest. The key is to make proposals that you can realistically stick to. A broken promise will always make matters worse than being upfront about what you can manage. It's also worth noting that lenders are not allowed to push forward with court action if you have a valid mortgage protection claim, if you're waiting for benefit payments to come through, or you can demonstrate that you're actively trying to sell your property at a sensible price. They also have to pause if you've engaged a professional debt advisor. Many of the letters sent at this point include official advisory leaflets. They can look alarming, with bold warnings about court and homelessness. But remember, the lender is required to send these. It doesn't mean repossession is around the corner. What matters is how you respond. At this point, it's also important to keep a paper trail. Whenever you speak with your lender, follow it up with a short email or letter summarising what was said. For example, further to our call today, I can confirm that I will be paying £300 on the 15th of the month and will keep you updated on my situation. This creates a record that you can show later if there are any disputes about what was agreed. Judges like to see that you've taken responsibility in this way, and it can often tip the balance in your favour. Another factor that borrowers sometimes overlook is that lenders are regulated businesses. They are audited and supervised by the Financial Conduct Authority, and their staff have to follow scripts and compliance rules. So even when letters sound heavy-handed, behind the scenes, lenders are under pressure to demonstrate that they've treated you fairly. The more you engage, the more evidence they have that they've done their job properly, and the less appetite they'll have for rushing to court. I've seen people at this stage manage to put together modest repayment plans, sometimes as little as £50 or £100 a month on top of the regular instalment, which is enough to satisfy the court that they were serious about catching up. The message here is clear. You still have room to manoeuvre. Don't let the stern letters make you think you're out of options. After 3 months, many lenders will issue court proceedings. This is the point where homeowners often panic, but even now, losing your home is not a given. A county court hearing gives both sides the chance to be heard. Judges are there to weigh up whether the lender has followed the correct process and whether you still have a viable path to resolve the arrears. Preparation is everything. You'll be asked to complete an N11M defence form, which sets out your financial situation and explains the steps you've taken so far. You'll normally have 14 days to return it. You may also wish to complete an N244 application, which allows you to ask the court to delay or suspend repossession if you can show a credible plan, such as a sale that's progressing or a new job offer that will restore your income. On the day of the hearing, cases are often less formal than people expect. Hearings usually don't last more than 15 minutes in a small county courtroom. The judge will ask straightforward questions: how did the arrears build up, what steps you've taken to address them, and what you propose to do going forward. In some instances, lenders will even approach you in the corridor to discuss a settlement before going inside. Judges will look carefully at whether you've acted responsibly. Have you kept in touch with your lender? Have you been honest about your situation? Have you made an effort to pay, even a token amount? Have you explored practical ways of resolving the debt? Bring along proof of a job offer, a letter from a family offering support, or confirmation from an estate agent that the property is sold subject to contract or under offer, and that can make all the difference. When your case does go to court, remember that the judge is looking for fairness, not to punish you. It's not unusual for hearings to be adjourned if the judge feels you've been genuine, but just need a little more time. For example, I've seen cases where the homeowner was waiting for proceeds from a pending house sale, and rather than granting outright possession, the judge gave a further 8 weeks to allow the sale to complete. As I mentioned before, it's worth remembering that duty solicitors are often available at the court free of charge. They specialise in housing and repossession cases and can step in to represent you on the day, even at very short notice. Many homeowners don't realise this and assume they need to pay for expensive legal representation, but these schemes exist precisely to stop unfair repossessions. The possible outcomes vary. A suspended possession order allows you to stay in your home as long as you stick to a repayment plan. The case may be adjourned to give you more time. A time order could change the terms of your repayment altogether. Cases can be struck out if the lenders have not followed the rules. The worst case is an outright possession order, but even then you'll normally be given at least 28 days to move, and sometimes longer if you have special circumstances. I've been alongside clients where the judge granted a suspended possession order, meaning that the threat of repossession was put on hold as long as they kept up with payments, and they went on to clear the arrears entirely over time. In other cases where the lender hadn't followed the correct process, judges delay proceedings altogether. These are real practical outcomes that happen every day. So for many people, the best way forward is to sell. This can feel like a big step, but it often clears the debt completely and prevents repossession from leaving a permanent mark on your credit record. The most secure route, if you're willing to compromise on price and you have sufficient amount of equity, is a direct sale to a genuine cash buying company. This is by far the fastest and most reliable option, with completion possible within a week and in emergencies, exchange in as little as 24 hours. The trade-off is that you'll be selling below full market value, but in repossession cases, speed and certainty can outweigh price. The key is to choose a legitimate buyer who can prove funds, is a member of recognised bodies such as the Property Ombudsman and the National Association of Property Buyers, and provides written assurance they will not drop the offer at the last minute. Auction is another strong option. Once the hammer falls, contracts are legally binding and sales usually complete in 28 or 56 days. They can be ideal when a property needs work or when lenders want reassurance that debts will be cleared quickly. At Property Solvers auctions, we often see competitive bidding drive prices above expectations, leaving homeowners with enough to clear their mortgage and sometimes even a surplus to start again. The final route is a traditional estate agency sale. This can achieve the highest price but is usually the slowest, with transactions often taking 5 to 9 months to complete. Through our express estate agency service, we aim to speed things up and secure offers in under a month, helping homeowners avoid the delays that can make repossession more likely. Whichever route you choose, communication with your lender is key. If you can send them evidence that the property is listed with an estate agent, entered into an auction catalogue, or under offer to a cash buyer, it demonstrates that you're actively solving the problem. In many cases, this alone has been enough to persuade lenders to pause court action. They'd rather see the mortgage cleared through a voluntary sale than go through the expense of taking the property back themselves. We often remind people that repossession doesn't wipe the slate clean. If your property is repossessed and sold by the lender at a low price, you remain liable for any shortfall alongside a range of expensive legal fees. That's why being proactive about selling on your own terms is so important. You're in control of the price achieved, you protect your credit rating, and you avoid the risk of being chased for debts after the property is gone. I've worked with homeowners where presenting a signed contract and proof of funds from a cash buyer to the court was enough to halt eviction proceedings entirely. On the flip side, I've seen people badly let down by rogue operators who drop their offer days before completion. That's why due diligence matters so much. Across thousands of cases, I've noticed the same themes time and time again. Lenders and judges respond to homeowners who act early, who stay in touch, who provide evidence of their circumstances, and who make realistic commitments. Even small payments show intent and carry weight in court. By contrast, silence, broken promises, and unrealistic proposals almost always make everything worse. The system is designed to work with people who are honest and proactive. The more you can show that you're taking steps to resolve the arrears, the more likely it is that you'll be given time and space to sort things out. So, to bring it all together, missing mortgage payments is serious, but repossession doesn't have to be the outcome. At 1 month in arrears, the key is to pick up the phone and start the conversation. At 2 months, know your rights and keep your proposals realistic. At 3 months, prepare carefully for court, complete the right forms and show the judge that you're acting in good faith. And throughout the process, remember that selling is always an option that can stop repossession in its tracks and give you a clean slate. At Property Solvers, we've helped people in all these situations. Some catch up and stay in their homes, others choose to sell fast and move on. In every case, the important thing is that repossession was avoided and people were able to take back control of their circumstances. If you'd like to talk through your situation in confidence, we offer free bespoke valuation reports and can explain your options in plain English. You can reach us on 0800 044 3696 or by email at info@propertysolvers.co.uk or via the live chat on our website. A big thanks for watching, and if you found this useful, please consider subscribing for more insights on the UK property market alongside buying and selling homes.